Good afternoon, good evening, good morning, good night, wherever you are. Bitcoin makes a new high. How about that, huh? How you doing, Lex? Total Jag. Hagon from Chicago. What's happening, man? Jack, how you doing, mate? Rick, teach me how to love. I wish I knew. I just got back into crypto and it taken off on me. Yeah, man, it's been rallying all year. Since the 1st of January, it's been up and at 'em, really. What's up, buddy? Yep, everything's well, man. Hope everything's well at your end. Dino and DC Woodworking, what's happening, dude? Let's Mars, g'day. Let me turn this music down. Okay. Yeah, so where are we? Where are we sitting right now? Inflation's at 6.4%. Interest rates at 4.75%, likely to go up. We hope that inflation's going to come down a little bit more aggressively on the next CPI report, but we'll see. That's still about a month away. We're about an hour and 7 minutes into the new daily candle. A bit of a later stream than usual, as you can probably tell. Now the S&P 500 has had a pretty interesting week. Like, it's just, I mean, interesting in the fact that it's just been staying put inside of range, you know. Where's the Monday candle? Pretty much here, starting on this big green candle here, and then moving all the way across is this week. So it's been fairly much, you know, range bound, hitting resistance. Now this blue band that I have up here, see this blue zone? That is, if we go out onto the, say, the daily and just zoom out, you can see that blue band is basically noting the top of this high. This little high here, not quite these ones, but yeah, definitely here as well. We had a bit of a optimistic break above it, but it didn't last very long. We sort of, something happened. You know, there's support back here. Maybe it's like a support resistance kind of level, but that level got rejected. I would dare say some kind of data came out, or like some kind of event came out and happened and caused it to get rejected. But let's go and have a look at the larger picture as well. So obviously you can see that I've drawn out somewhat of a head and shoulders pattern. Now the only thing I like about this the inverse head and shoulders is that you can clearly define the left shoulder, the head, and the right shoulder. Now the neckline is what's a bit ugly about it. You know, it's a very angled neckline, but nonetheless, it qualifies as an inverse head and shoulders. So that's enough to get the trend reversed off this downtrend, reversing it to an uptrend. So we've got the evidence of that so far. Like, yes, we've broken out of that almost 2-year-long downtrend. We've come out of it. We've come back a little though, and this week has just been sort of like staying put, like seeing if we have permission to carry on, or whether we need to really come back and back test this trend line here, much like Bitcoin did with its trend line. So if we go across to Bitcoin, and let me turn off a couple of lines here just so it's easier to see. Let's go to logarithmic falling wedge. Go out on, say, the daily chart, and I'll hide this other TA as well. So you can see, since the all-time high, there's been a resistant trend line coming down. There's been a support trend line coming down as well, forming a huge multi-year falling wedge, which we have since broken out of. Right here, we broke out of it, found resistance, pulled back again, found support, and now we've seemingly taken off again to make a new high for the year, which is really cool. So we'll take it back off log, and we'll turn those lines back on because we're going to talk about some levels as well. All right, so just zooming into the daily chart here. You can see there's our June drop off. That was Celsius crash. This was the lunar crash. And then here over here, all the way over here is the FTX crash. So 3 pretty dramatic, like human error type crashes there. This one was a bit more natural. This was due to the fact that, well, they're all natural, but this drop here, the most severe drop, was due to the inflation starting to get out of control with the interest rates being turned up in turn. So yeah, just macroeconomic conditions. The S&P was falling at this point, the Dow Jones, all of the stock market was correcting. So you best believe Bitcoin's gonna do the same, if not earlier and sooner and faster and harder and further. Yep. All right, so big old bear flag off that drop, breakdown. Another bear flag there, breakdown. You'll probably hear of, if you guys know of Keep Going, he's a guy from our community, and he did a chart not long ago about these bear flags that have been sort of playing out all throughout the bear market. We just had these consolidative rallies that went nowhere really. They found resistance, making slightly higher highs, but nothing dramatic. And eventually, you know, the market loses that support and goes down further. Now, what are we dealing with now is that we've at least tagged, if not, we did like a bit of a swing failure pattern on this August high. So that's what I've labeled here, August high from back here. That was $25,211, and just a matter of hours ago, we pulled in a $25,250. So, you know, a good $39 higher. not terribly. I wouldn't consider that a breakout by any means. That's more of a swing failure pattern, a double top, that kind of thing. Let me go back through the comments here. We need a healthy correction. Yes, I believe so. I mean, we've been calling for corrections the whole way up since the 1st of January, really. And we've got some along the way. Where's January? Here it is. So yeah, there has been pullbacks. You know, this whole zone was like an ABC type thing. This whole area was just like a sideways choppy consolidation. We finally got a correction off it. A move higher, and look, another healthy pullback we're getting. So, and it's off the back of some news. So Jack says it's much pain as Celsius FTX and separate cause. It's good to take the trash out. Yep, 100%. Like, to get rid of those bad players, those bad actors, as people say, from the community, the best. So, also bearish PPI last night. Yeah, so the producer price index coming in higher than anticipated, which is not great. Let me go to the calendar here. So we had 3 days in a row of critical or high impact events. We had CPI Tuesday. We had retail sales on Wednesday, which was positive. That was optimistic, right? Retail sales pulling in a 3% when it was forecast to be 1.9. Core retail sales 2.3, forecast at 0.9. So much higher than anticipated for sales, which to me translates to, you know, this could be a really solid Q1 of 2023, which would be positive for GDP. When GDP is strong, that means there is no recession, you know, growth. Recession is defined by, I believe it's 2 quarters or 2 or 3 quarters of negative GDP. So, I mean, this coming in like this is great. Now, the third kind of day that we've had. This just, you know, recently we had PPI and unemployment claims. So less people are claiming unemployment than anticipated, which means more people are working, which means more people are getting paid to contribute to inflation, because demand drives inflation. Supply issues contribute to inflation as well. So if there's supply issues and strong demand, it's a nasty combination there. But hopefully things start to continue to balance out. We'll see how we go. Hey Noodle, what's happening? What's up, Slick Rick? Hope you're doing well. So yeah, a bit of a mixed bag there. And then core PPI, so producer price index, forecast 0.3, pulling in a 0.5, so you know 0.2% higher than anticipated, and definitely an increase off the previous few. Really, we haven't had a 0.5 since let's see, June, the nasty month of June last year. We haven't had a 0.5 since then, so it's been kind of all over the place though. So PPI is similar to CPI, consumer price index, producer price index. So when a producer's bumping their prices up, it's because it's getting more costly for them to basically secure the goods that they need to produce their goods to sell to consumers. So yeah, a greater figure for that is not great for the risk on assets like the stock market, the crypto market, for example. However, for Forex, like if you're trading the US dollar, you're trading in, you know, backing the US dollar going up, then you're doing well, because at the moment the DXY has held ground, and if not climbed up a little here. It's made a series of, there's a double bottom here, and it's broken this resistance here, back tested, found support, and now it's moved higher in the last like 16 hours or whatever that is. 12 hours? Yeah. So we were hoping not to see a DXY recovery, but that's what we're getting. BTC is still hanging out, like it's still above the September high. We've made a new high, and it's looking okay. I don't think the DXY is a total threat just yet, but it could happen if it starts to take off and get support. And you know, obviously the DXY is an index. It's indexed against other countries' performance, like other currencies like the yen, the euro, the pound, to name the three majors there. And if those are doing poorly, the DXY will do well, and vice versa. So yeah, we hope the rest of the world can start at least equaling or matching the performance of the dollar. We know that the dollar is the reserve currency of the planet, so interesting how that works. Now let's go back to, let's see, Bitcoin. What have we been dealing with in the past hour or two? You know, a bit of a level of support here. If we take the entire move starting from here all the way to the top, we'll find out what the FEB retracement is. It looks like it's almost tagged the 50% here just by eyeballing it. Let's see. And yeah, there it is, 50%. So not quite touching it to the dollar, but it's a fairly, it's in the ballpark of that 50 retracement. So right now, trying or attempting to climb back up. We'll see what we get. Now with the SPY, get rid of all these drawings here. Okay. Yeah, with the SPY, if we look at the the futures S&P 500. So that would be the SPX, I believe. Let me get rid of this stupid squiggle. There it is. That one. Okay. Let's turn that chart on. So this is the US 500. This is the one that keeps moving after the market closes, because it is the futures market. And when did the market close? 7 o'clock my time. So just here after this real nasty correction. So yeah, not a whole lot's happened since the market has closed, which is kind of typical for the futures market, unless something happens news-wise. But yeah, we've got one day left of the week. It's Friday here in Australia already. I know you guys are Thursday night at the moment in the US, my Yankee Doodle friends. So we'll see how Friday goes. It might just be more of the same of this boring old range-bound box that we have going on here. Where did it start? So about here. Yeah, that's the week that we've had so far, thus far. Now it'll go all the way out until here. Right there. So we've got one more day. Am I getting this right? Tuesday, Wednesday, Thursday, Friday. Oh, that's 2 weeks. My bad. Let me adjust this. Saturday. Markets open Monday 9 a.m. Wait. Oh, that's right. This is the futures. Never mind. Anyway, point being, we've been in a consolidation sideways on the S&P 500 for a good 2 weeks now. So we haven't broken out just yet. This overhead resistance is significant. There's no denying that. But yeah, the hallmarks of that support, that pivot, is what I'm paying attention to. We've got, the lower lows to the higher low, and then pulling in that higher high was really cool. So that's the beginnings of an uptrend. If we can hold, like I said in the previous stream, if we can hold a low somewhere above here. I mean, if it pulls in maybe like here, that would be great. And then if we pivot again and get another move up, that's what I'd want to see. I'd want to see this price here attacked, which is basically 44, 43.50, something like that. Maybe 43.20. See, this is the futures pricing, so it's a bit different to SPY. Yeah, that's what I'm looking at. The S&P, it's still looking strong, even though we came off the back of some really ugly data that we didn't want to see. There's nothing coming up for the rest of the week. Friday, Saturday, Sunday, Monday, Tuesday is all quiet. Flash Services PMI is the next supposed high impact expected event on Wednesday, the 22nd of February. There's some meeting minutes coming up next week. Late next week, so Thursday next week. We'll see what they're thinking about, where their thoughts lie. Then we got preliminary GDP. So remember, we had advanced GDP, which came out positive for Q4 2022. This would be the preliminary. So that's the second reading we get about GDP, reporting on the quarter that was. And then we have, what's after this? Core PCE price index. PCE, so producer something or other. Or personal consumption expenditures. Okay, there you go. So yeah, much like other months, this month's been full of events, as we can see. I think the most impactful ones are already through for February. Let's see this. Let's just review this month, February. So yeah, we had the FOMC funds rate come out on the 2nd of Feb, and then we had Powell speaking on the 8th. We had CPI just recently on Tuesday the 14th. So Valentine's Day. Happy Valentine's Day, everyone. I know it's late. I think I wished everyone happy Valentine's Day anyway already. Yeah. So retail sales, PPI. Yeah, the rest of this month shouldn't be too crazy. Like we got, well, FOMC meeting minutes could be pivotal. GDP figures, we'll see if that's still suggesting similar action as to what the advanced GDP produced or spat out. So we'll see. But yeah, unemployment claims. Okay, that'll be interesting. How many people are claiming unemployment? This is what we had today. So we've got another reading of it down here. So I don't even know how often that actually comes in pretty often, like every couple of weeks, or every week actually. Maybe every week on Thursdays we get this unemployment claims report. Yeah, every Thursday. Okay. But it's a medium impact event, the unemployment claims. The actual unemployment rate is the one that comes in less frequently. So I think that may have more bearing on price action and market sentiment. But yes, Jack, let the crab take control again. Yes, the boring old crab. Wow, look at all this ugly brush strokes here. Let's get rid of it. So yeah, going back to Bitcoin, we got that FEB retracement, that 50 FEB bounce so far. We'll see if it can hold. It'd be nice if it did. I mean, all things will go quiet for a while until we get the US session for Friday kicking off. Just looking at it, not the best end to the Thursday session. But yeah, we'll see if we can maintain the bottom of this range for the S&P 500 going into Friday. Obviously, the trend is still up, which is cool. We're still dealing with an uptrend here. We have not got lower than all previous lows, so it's been consistently pulling in higher lows, which is what we want to see. We just have to be careful of structure break. So if we get any kind of change of character or market structure break of structure, we'll reassess. You know, we could start looking short-term bearish if that happens. But still, look, we're dealing with some kind of trend here. Now, trends don't last forever, as we know, so we got to be careful of our expectations. But that's looking good so far. We're getting squeezed. We're getting pushed up into this resistance that I was mentioning earlier. So it's a bit of it could play out to be an ascending triangle. You know, tap on resistance a few major times until we get the pop. That could happen. Also, just be wary of any kind of like reversal patterns, like head and shoulders, that kind of thing. Doesn't look like there's too much threat of a head and shoulders at this point, because there's no clear. I mean, if you could try and suggest that that's a head and shoulders, it's kind of already broken down off that one. Yeah, we'll see. We'll see how we go. It's hard to pull a shape around that. I mean, look at the short-term one we had. Look at this inverse head and shoulders. This is like a textbook. Just a little baby one, but we are on the hourly chart, so it's not too little, but it is there. That's your classic reversal inverse head and shoulders right there. It's probably some kind of one here. This is definitely a head and shoulders here. Yeah. Very ugly price action and structure for pattern watchers or for like, you know, that kind of thing. Doesn't really slide too well there, but yeah, it's what we got. Chopper Chops says, if you have time, no big deal. If you can't, but can you take a look at TCRX? Never heard of it for me. I bought it at $2. It went down to $1.74-ish, bouncing up. currently money. Yeah, if you want to request any kind of TA, you're gonna have to super chat me $20. I'm just kidding. Some channels do that, by the way. Requests, they have requests. You need to pay for him to have a look at stuff. That is Mitch Ray. It's alright. During a bull market, I think it works. People actually go through and pay him money just to have a look at some charts. But yeah, look, I'll have a look. Let me open up my... add it to this list here. So I've never heard of it. It's TCRX. TCRX. Okay, it's not a crypto. It's a stock, I'm guessing. So let me add this stock onto the chart here. No dramas. So you said you got in at 10. Wait, take a look. I bought it at $2. It went down to $1.74ish before bouncing up. I'm currently in the money. Oh, excellent. That's great. Excellent. T-Scan Therapeutics. Okay. Well, look, this is what looks good about it, is that it has a low here and then a higher low. It has a high here and then now a higher high. So that's optimistic. That's not a downtrend. That's an uptrend right there. That's the birth of an uptrend off what looked to be a severe downtrend here. So hang in there, I would say. Keep your eye on like just the support structure, you know, like if it's gonna pull in a level of resistance, then you have to look for support. Like, where's it gonna find support? So this pullback was really severe off this initial run up here. This pullback hammered, and probably went deeper than a 786 fib retracement, maybe. Let me just check that. Yeah, slightly deeper than a 786, it seems. So could that happen again? Possibly. Be careful with that. So just, yeah, using the entire move up here so far. Not saying that the move up is over. It could go higher, right? But if it was to pivot from here, these are the levels that you would keep your eye on for potential bounces. A popular zone for a bounce is a 618, even though this previous run did a bounce at this. It went as deep as the 786. So yeah, fibs are cool like that. You can sort of judge where things might turn around or find support. Not to mention, obviously, previous pivots. So pivot here, pivot high, could produce support if there was a pullback. You know, support resistance levels. That's pretty much all I got for you, man. But so far, it's okay. I would say. On the 4-hour time frame, obviously the oscillators are very hot right now, so be careful for expecting some massive move up. Maybe a couple of days of pulling back. Maybe next week it'll spend a bit of time consolidating sideways, kind of like what we've just been through with Bitcoin. You know, it pushed up really impressive and then it sort of chopped and even retraced some before getting that next leg up. So yeah, that's sort of just keeping it real. Just be careful of your expectations, maybe. But yeah, by all means, like it may have turned a corner here. Like it looks like on a more macro scale that we have some kind of like, you know, double bottom, which is also a reversal pattern, right? Double bottom, inverse head and shoulders, they do the same thing. Just as a double top and a head and shoulders is a reversal pattern, turning an uptrend to a downtrend. So, but yeah, hang in there. We'll see how it goes. I'll come back to it. I'll leave it in my stock list here so that we can have a look at it. How's Tesla going, by the way? Still kind of elevated. This is where a guy called BLS jumped into a long, and he went up real nice. So that's still in an uptrend. Starting to lose a bit of momentum, but still, yeah, an uptrend nonetheless. Yeah, I don't look at too many stocks, to be honest. AMC, yeah. It's a meme stock from, like, it was a meme back in 2021, but people are still jumping in it just like it, you know, as though it's going to do this again sometime soon. It needs, for it to do this, it needs the environment to do it in. And I don't think the stock market's quite there yet to support that kind of behavior on an asset like AMC. Not saying it can't happen, it's just not at the moment. I doubt it's going to happen anytime soon. At best, you might get some of these relief pumps. God, look how pumpy and dumpy this is for a stock. That's crazy. Pump, dump, pump, dump. Pump and dump coin.com. Whereas if you look at a legitimate company, like, well, not saying AMC is not legitimate, but this is a little bit more natural. Like you can see there was trend here, there was trend here. There's no big random pump and dumps. Like, I mean, you might class that as a pump and dump, but it's a little bit more steady. It's not as, I don't know, hard to explain. Anyway, hard to be convincing anyway. That's what I'm trying to explain. What else we got? That's pretty much it, guys. Just hanging out for that Friday session of the stock market. Hopefully some support can be found and people get over the negativity of what happened with this PPI report. Hopefully that's all been priced in now, and that we can just settle down and carry on with what we were trying to achieve, with, you know, finding support and maybe even looking at some kind of continuation of this bull run that we're in. Because, you know, we smashed out of that resistance. We smashed out of it. Pretty decent. It's just we've been slowed up by a couple of negative reports on things, and there's still this like overall elephant in the room, like this sort of this fear in the back of everyone's minds that there's going to be a recession. So and you know the whole debt ceiling meme that's going around at the moment, like, oh, there's a debt ceiling, you know, America's going to collapse because of the debt ceiling. They've come across debt ceilings in the past, and what did they do? They just raised the debt ceiling. Problem solved. Why the hell would they not do that again? Oh, let's let the country, you know, go into massive turmoil just because of this debt ceiling thing, and we don't want to move the ceiling up again because it's not good. I don't know, I'm not an expert, but look, judging by past behavior, I'm pretty sure they're going to raise that debt ceiling again. And I think they don't even have to come up with an answer or a response or deal with it until June. We're only in February, so there's a few more months to play out before we even have to, before they have to address it. So no doubts, obviously they're debating over it, you know, in the Senate and whatever committee looks after that shit. Whoever makes the decisions on the debt ceiling. I'm guessing it's, I don't know, the House of Reps or the Senate or something like that, somewhere in government. Whoever gets to call the policies, right? Whoever's calling the shots. But yeah, debt ceiling narrative. We'll see what happens with that. I think if it doesn't get addressed and America defaults on the debt because they don't meet the repayment on time, then it just reduces the country's credit rating, like on a global stage. So they lose their, you know, shining credit rating that the whole world is like, you know, looking at. Other countries that have defaulted on debt, like Greece, there's many countries. Greece is the only example that comes to mind, but yeah, there's a few. It doesn't mean the country ends or anything like that. It's just economically not great. Hopefully Greece can turn a corner and actually start building and repairing their government and their economy, but they've probably got some tough times ahead. But yeah, I haven't really like looked at many reports about countries and how they're performing lately, but yeah, hopefully the US, I mean the juggernaut that the US is, hopefully they can sort it out and address the issues before too long. Yeah, I don't know. Like if markets crash and burn, is that gonna be the same for Bitcoin? Is crypto gonna follow that, or is there gonna be some kind of decoupling event, like where crypto starts to do its own thing, or maybe crypto finds support while the markets around it start to retrace and really go down and correct? You know, like where is the crypto floor, so to speak? We kind of saw evidence of a floor on Bitcoin and crypto back late last year. Not late, more like sort of Q3, you know, July, August, September. There was some kind of floor that we were dealing with. If I go back to the daily chart, let me turn off all the lines, get rid of that FEB retracement. But yeah, as the stock market was falling and making new lows, Bitcoin was actually doing this. Like we were getting, you know, so that if you look at the baseline, let's just use this line, the June low to like here, that was evidence of support being held, if not higher, right? While the S&P 500 was making lower lows. So there was a bit of a breakaway, there was a bit of a decoupling of crypto to the stock market at the time. I mean, the difference, the primary difference was that crypto had already fallen like a good 68% at the time, whereas the stock market only fell like at the time 23%. So it had a lot more room for damage compared to crypto. Crypto's had already scrubbed out 60% of the market. So, you know, how much more can you fall after falling all that way down? You know, the rate of the speed of the fall happened quick here, less fast. Like you can see that there's evidence of it slowing, right? Each fall got diminished. So there were a few people expecting a return to the speed, to the velocity of the fall. Like why the hell? I don't know. But you know, basically it was counting on another black swan happening. FTX couldn't even get the ball rolling for a larger, broader drop, you know, compared to this one. This one here was mammoth. Like that was a big drop because we were so pumped up. There was so much liquidity, so much leverage in the system. It all got drained basically. And then we had another fall. Like all of that fall, I'm going to just class it as one fall. It was like pretty much equal to that fall. That was the lunar Celsius collapse. Not to mention, you know, interest rates and inflation being high. All of it, just a really bad shitstorm. So two very nasty drops there. And then slight optimism here, slight optimism there. A bit of a evidence of things starting to pan out. And we're going into like a crypto winter, chopping sideways. FTX tried to... Well, it's just a result of something bad happening. So FTX collapse happened here, and we didn't even get that much lower than the June low, did we? It was like a couple of thousand at best off that previous low. So that was evidence that, oh, we've really wrung this thing out. If you think about a sponge full of water, all of the liquidity, all of the sponge's water was squeezed out through this period here, the bulk of it, right? So how much more liquidity would be in there to squeeze? Not a hell of a lot, evidently. I don't doubt that if FTX happened up here, maybe it would have had a more dramatic drop. Like it would have contributed to maybe this drop being deeper, like sooner, you know? But because it happened after these two primary drops, it was only a little fella, you know? So that was kind of evidence that, look, the tide has turned a little, and that the bearish, like the liquidity that needed to get squeezed out, or the bulk of it was already squeezed out. So we had some kind of like, you know, reversal situation, double bottom, ugly double bottom, I guess you could say, because it's kind of sloping down. But anyway, we all know that the logarithmic falling wedge is what came into play there. We turn the log on. There we go. Log falling wedge breakout. So pretty nice. MSJS, so bull market. Look, it depends how you define bull market, but it's definitely got the beginnings of a bull market. Bull markets need to do this before anything, and it's done that. So it is a good start. It's a bull trend or a bull rally or a bull run, no doubt. Like you can take that to the bank. Like that's what that was. That's what this has been. But bull market, that's a semantics game. Like depending on how, like what you want to call a bull market. Let's turn off the EMAs. We'll go back to just the moving averages here. Go full screen. We're on the daily chart. We can see we had a golden cross on the daily. Pretty bullish if you ask me, getting a golden cross like that. The weekly death cross doesn't faze me too much because it's just reporting on the bear market we just came out of, right? Or the one that slowed down, and now that we're going bullish again, it's like this signal has come in so late because it's a lagging indicator. Moving averages, death crosses, golden crosses, they're lagging. They're reporting things after the fact, basically. So people use them as just like as secondary confirmation of a larger move happening, and they try to use it as an indication of what's to come in the future, which has been proven not to be the case. And I'll show you why. If we go to the DJI, the Dow Jones, and we turn on the same indicators, delete all that. Let's go to my Dow Jones index chart here, DJI. I think this is the one that has like over 100 years of data. Yeah. So this goes back to the 1800s, 1896. And then you've got the 1900s starting like just here, the turn of the century, just over here. So yeah, lots of data to use. It's like one of the charts that has the most data on it, which is why it's good to look at for examples of things happening. So if I bring up the indicators that we want to see, which is the moving averages, jump to the weekly. We'll just focus on simple moving averages at the moment, not EMAs, so just SMAs or MAs, whatever you want to call them, and just find evidence of death crosses on the weekly. Okay, so here's one. This did result in a big dump right here. But can you see the difference with Bitcoin's death cross? Price is basically already coming up and touching that death cross right here. Whereas this death cross happened and price was all the way down here. So it's like all the damage had been done, really. It was just this final push that it had to the downside, which made that death cross cycle or phase a lot longer. Whereas let's see if we can find other weekly death crosses that are more similar to what we're getting at the moment. Maybe something more like this is happening, where price has, so death cross happened here, price did come up in a rally and test the top, broke on the top for the time being. This was the .com bust or break, but this is the Dow Jones. So the .com bubble bursting didn't really affect the Dow Jones too much because it's not the right sector for it. The .com crash affected the Nasdaq because it's tech heavy, right? But anyway, look, death cross. There was a period like a depression or a recession at the same time, so that was nasty. But you can see things had already started falling from back here. And it actually came in initially quite shallow, didn't it? It was like almost a non-event. but then something happened and it crashed all over again. So yeah, I mean, that could very well happen with Bitcoin. Like if we get some kind of disastrous like black swan that no one saw coming, like maybe that's what gets the death cross really coming down. But so far there's no evidence of that just yet. We haven't had a black swan. The debt ceiling scenario is the best that the bears can come up with at the moment as to why they think there's going to be a recession, but we'll see. All right, let's look at other examples of weekly death crosses. Here we go, look at this one. Weekly death cross happened here. Price was already rallying up into the 200 weekly moving average. We had a low here, a retest of the low, so double bottom, golden cross on the weekly, death cross on the weekly, golden cross. So very choppy. I mean, there's no surprise there that they happened so close together and like with not much coming of it, and that's because it was a ranging market at the time. Ranging market being like this, like just in a box basically. And that was a nasty one. That was like a 10-year ranging market, I think, like a decade long. Went from like the early, let's say mid 60s to like the mid 80s. Almost the mid 80s. So yeah, like pretty damn nasty. A decade. Who wants to spend a decade doing that? Not me. But it can happen. I mean, look, what if that were to happen right now? Let's grab that as an example. Where's my bars pattern? There. So if we grab that, move that, turn automatic off. What if we get something like this for a decade, you know? We won't be out of it until like 2040 or something like that. Or maybe not quite, but yeah. 2035, 2036 or something. It could happen. And look, just because there is these, look, there's still ups and downs. There's still trends that happen inside this, you know, giga consolidation. But yeah, I guess for the last 30 years, we've been used to this. Almost 40 years, really, we've been used to, you know, big trendy markets with lots of growth, you know. So a decade of chopping sideways, I mean, we haven't seen that for like 50 years. So, but look, there's a nice bull run. That was after the war, or during the war, after the war. Nice recovery. Yeah, I guess we'll just have to wait and see what the world throws at us with, like, you know, global events, that kind of thing. Things are looking kind of sketchy at the moment. You know, wars, natural disasters, UFOs, aliens, weather balloons, China, Russia, all the drama, so we're not through it yet. Anyway, guys, that's pretty much it for me today. Just pulling this all back to Bitcoin. Us in little crypto world, in our little bubble here. Let's go price levels and key levels. Recent TA. So look, we've come a long way since last weekend. Here was last weekend here, right? Monday, Tuesday, pretty boring, stock standard. Wednesday, okay. And then Thursday, wow, really nice. And then today, Friday candle is playing out. It's trying to hold support at it. Seemingly 23.5 was some kind of potential bounce point. We've had hourly candle close, hourly candle open at that point. The 10 o'clock candle looks good, so that's the first hourly daily candle there. So yeah, so far so good. We'll see if we can keep it up and recover all of this disaster here that we had over the past 7 hours. yeah, that's pretty much it, guys. I'm just reading the comments here. I won't read them aloud. I'll just catch up. When XRP to $10,000, geez, I don't know, man. Let's try and get to $1 first, hey? Let's try to get to $2 or $3. We're back below 40 cents again on XRP, so lots of work to be done. Let's go to the weekly chart for XRP real quick. You know, we've been in much better places before with XRP, so don't hold your breath. Just be careful with your expectations for XRP. It could happen. I mean, I've got no idea. My guess is as good as the next person, but I mean, its track record for the past 12 to 18 months ain't great. Has the SEC thing happened? Like, is that over now? Like, can we close that chapter yet? SEC against Ripple? Because that's getting really boring. But anyway, yeah, like, I wish all the best to XRP. Hopefully it does go up. Hopefully the XRP holders and bag holders get their money back. But we'll see. Something I've learned off the back of last year and even 2018 is don't let the FUD get to you guys. Like, it sounds so real and dramatic at the time, but it's all for a purpose, I feel. You only hear of this bad negative shit because they're trying to manipulate the game. They're trying to drive a certain narrative. Some of it's legitimate FUD, like stuff to pay attention to and be cautious of, but a lot of it that comes out is just spin, and it doesn't mean shit really in the bigger picture. So hang in there. If you're an investor, you know, like, this is just a very tough time globally. We might not be out of the woods until, you know, 12 months down the track. Or, you know, it could happen sooner than we think. Who knows? I mean, who saw Bitcoin making a new high yesterday? I didn't see it happening so quickly. So yeah, things can happen. Surprises come in all shapes and sizes and forms, good and bad. So yeah, TA ain't gonna paint the perfect picture for you, unfortunately, as much as we try. But we do the best we can with what we got, and that's all we can do. So anyway, guys, I'll wrap it up here. Thank you so much for tuning in. We've had a few more people than recently, so that's cool. I think peak was 25. Not bad, not bad. Thanks for hitting the like button. And have a great evening, have a great day wherever you are, and I'll catch you in the next one. Take care.